Again, we're seeing lots of change politically. Obviously, the snap election last week didn't go as planned, which has generated a lot more uncertainty for the UK market. But that, given all the other changes that are happening politically within Europe, means I think it's going to be end of the year before we see more clarity relative to Brexit and how other elections go. Certainly the German election, although I think that will be quite stable for Merkel. Mr. Macron looks like he's got a majority, so I think that's positive for certainly the French market, but also for the pro-European market, or the collective European market. So I think things are moving quite positively, not quite so much for the UK, but we just got to wait and see how it pans out. We won't know until the end of the year, really, and what it means for Brexit. But that's the politics. That's not everything when it comes to decision making, when it comes to real estate. Investment into real estate continues to grow, or money into real estate continues to grow and expand. The fundamental support growth into real estate, and Europe's still an attractive market. It's not as strong as it was maybe 2 years ago when it peaked, but there's still an awful lot of activity happening across the continent. Germany's growing, certainly based on the Q1 results, and money continues to expand across the continent. And why? There's a lot of structural change. There's long-term bond yields which support growth into real estate investment as a safe haven or low return driving sector. And the structural changes we're seeing are really quite dynamic, as much as the cyclical economic support driving growth into markets. So structurally, a lot of change in offices, particularly industrial logistics, how that blends with retail, a lot of growth in resi, and if we look over the last 7-8 years, this cycle, we see those shifts in investment forms, so a bit less in offices, quite a lot of growth in resi. Industrial surprisingly flat in a lot of cities, but I think we're yet to see the real growth in investment in urban logistics. We'll see that in the next 10 years. Retail also growing, which shows that in major cities it's still very strong. It's only out of the core parts of major cities where retail is starting to weaken. The last year is kind of really showing that through for traditional retailers in particular, where their margins are being pushed and they essentially have to go to omni-channel. The whole thing's getting mixed up. It's quite exciting, lots of challenges, lots of opportunities, and lots of opportunities for investors to get involved in, particularly I think on the residential side as well, and the various niches that are available within residential. Senior living is a very interesting one. 20,000 baby boomers are retiring every day in Europe. That's a big figure. You multiply that by 50 grand's worth of equity, that's $1 billion worth a day coming into the market. And that's going to, again, drive the residential sector in more change over the next 10 years.